Hi, my name is Michael Chan and I'm a fourth-year accounting student at the Schiller School of Business. So today we'll go over the ACTG4400 managerial cost accounting analysis concepts so that you'll be ready for your final exam. Thank you for joining us today. So before we start, I just want to go over briefly what YorkSOS is. So what we do is we help you prepare for your midterms and your final exams through offering live tutoring sessions, digital exam aids like this one, practice exams, and notes. And all the money that we raise from these various products goes towards international development projects in Latin America. So if you want to get involved, definitely check out our page on YorkSOScampus.com to look at what kind of live sessions or digital sessions we offer, as well as our Facebook and our Twitter. Also on our website, you'll be able to find information on how to get involved kind of from an exec side, so helping us create these sessions, film these sessions, or in general kind of managing SOS from the internal side. Also, if you're interested in going on an outreach trip, which is where you'll be going to a Latin American country for 2 weeks to help them build various development projects like schools, agricultural fields, etc. Again, check out the website. So first we'll be going over strategies for the final exam, and then briefly how to prepare for the final exam. Then I'll go through chapters 1 and 2, introduction and cost terms. Chapter 3, which is the income effects of the denominator level on inventory valuation. Chapter 9, which is process costing. Chapter 10, which is spoilage, rework, and scrap. Chapter 6, which is period cost allocation. Chapter 7, which is joint products and byproducts. Chapter 8, which is revenue and customer profitability analysis. And Chapter 11 at the end, which is capital budgeting. So you'll notice that these chapters aren't in order, but I'm going by the way that your professor will likely be teaching them within the course, so within that order. So first, strategies for the final exam. So overall, the final exam for Accounting 4400 is quite a fair exam. So you'll have a fair amount of time, so work efficiently, but of course, do not spend too much time on one question. As opposed to your financial accounting courses, for managerial accounting, you should have a fair amount of time at the end of the course, at the end of the exam, to briefly look over the answers that you previously gave. Also, definitely focus on what's covered in class. So definitely go through the lecture slides and your lecture notes, but only skim through the textbook and read the sections that are related to things that were mentioned in the lecture. For example, there are some things like journal entries or how you create income statements or balance sheets or kind of frameworks of analysis that are mentioned in the textbook but that your professor will likely not touch at all in the lectures. So it is highly unlikely that you will look through those at all. In general, you should have a few full answer questions on your exam, and because of the concepts in managerial accounting, these should be fairly guessable. Very likely your major questions would be on process costing and capital budgeting, just because these questions would have a lot of marks allocated to it. And overall, just kind of be calm. Obviously, don't stress out. It's a very fair exam. It's not like financial accounting, so just go for it and I'm sure you'll do well. Know your stuff, so definitely understand what is going on and practice questions for those major questions like process costing or capital budgeting. And lastly, make sure you know what kind of rough work your professor expects, because if you spend your time doing unnecessary rough work, of course, that uses up time that you could be spending on just looking over the exam or focusing on other parts of the exam. In general, so preparing for the final exam, so I know we're all Schiller students, but do try to sleep well the night before. This would particularly help because if you're doing a lot of calculations, having a slightly rested or well-rested brain would help you not make those silly mistakes. Also, don't stress out. Again, it's a very fair exam, so I'm sure you'll do fine. And make sure you bring your, of course, pens, pencils, erasers, calculators, and water. Particularly, you may want to bring 2 of the pens, pencils, erasers, and calculator, just in case you lose one runs out of ink, or one runs out of battery, something like that. So we'll start with chapters 1 and 2, which is the account's vital role in decision making and an introduction to cost terms and purposes. So in general, managerial accounting is really focused on costs. So cost accounting measures and reports the financial and non-financial information related to costs in an organization. There are several differences, but the main ones is that for managerial accounting, the purpose is really to help managers make better decisions. While for financial accounting, this is really communicating adequate financial information to the public. For your primary users, the managerial accounting is of course managers, while financial accounting is mostly external users. The focus for managerial accounting is more future, while the financial accounting is more past. For the rules, managerial accounting is really based on cost benefit. So the more information you're trying to get, obviously the more cost in terms of time, resources, and money that would take. So you only get the amount of information in your organization that you really need. While for financial accounting, of course, you go on GAAP, IFRS, ASPE, etc. The time horizon, managerial accounting, it really depends because it's flexible on what kind of information the person wants, but it can be from hourly to many years, while financial accounting is quarterly to annually. And lastly, for behavioral implications, so managerial accounting highly influences managers and other employees because it gives them the information they need to make decisions within the organization. While for financial accounting, it only somewhat influences managers because maybe their bonus is based on it or something, but it's mostly for external users. So in general, the value chain is a very generic way of breaking down all the value-added activities within an organization. So this would probably only come up in a multiple choice exam, but at each point in the value chain, managerial accounting can be used to reduce costs or look at the effect of costs on one part of the value chain versus the other. So first we have research and development costs, so where you're developing new products. Then you have design costs, which is in essence kind of perfecting that product to make it something that you can sell to the market. You have production costs, which is just making the product, marketing costs, distribution costs, and customer service costs. So that could include basic things like any warranties, any kind of customer support, support lines, etc. So then we come to the allocation of costs. So this is really kind of a definition-based thing, and it'll mostly only come up on your multiple choice questions if you happen to have multiple choice. However, it's really important just to kind of really intuitively understand the concepts that will occur later. So first we have direct costs versus indirect costs. So direct costs can be traced to a cost object in a cost-effective way, while indirect costs cannot be traced to a cost object in a cost-effective way because there are benefits that are shared among diverse cost objects. So really kind of taking a step back from this definition, what does this mean? So for example, let's say you're Nike and your cost object is the shoes you produce. So your direct costs could be, for example, the leather in your shoes that is being produced because that leather is directly being used to produce each shoe. While your indirect costs include, like for example, the plant manager's salary because you need a plant manager for your production. However, the benefits of your plant manager cannot be tied directly to the shoes or cannot be divided evenly among the shoes. So what I mean by cost-effective way is that also some things may be considered direct costs, but just because they're so small, it's not worth it to treat them as direct costs. For example, the glue that is used in shoes. If you were to trace that little amount of glue to every shoe, it would be more expensive than the actual glue itself. So generally they would consider that an indirect cost. Also, if the cost object changes, then costs may be, that were indirect may be direct. For example, the plant manager's salary is indirect to the shoes of Nike, but if you're looking at the cost object in terms of a factory, so if your plant was your cost object, then the plant manager's salary is a direct cost because the plant manager's salary is directly the cost of having that factory. Then we have prime costs versus conversion costs. So prime costs are the direct costs needed for manufacturing. And usually it includes direct materials and direct labor. While conversion costs are your general costs, somewhat indirect costs in manufacturing specifically. So usually you would include manufacturing overhead as your conversion costs. However, in some cases, direct labor is considered an insignificant or very small part of the product cost, or it's something that you cannot evenly allocate directly through COGS. And in that case, it would also be included in conversion costs. So just as a recap, so manufacturing overhead is all the indirect costs in manufacturing, and just small things to include in there is overtime premiums on labor, as well as any the cost of labor during idle time, because this cost is not really going towards directly to products. Then we have variable costs versus fixed costs. So variable costs change proportionally to the change in the cost driver within the relevant range, while fixed cost remains constant when the cost driver changes within the relevant range. So in general, if your cost driver could be the number of shoes you make, or kind of in a different context, maybe you're running a call center and your cost driver could be the number of calls that your call center takes. Any variable costs are the ones that change proportionally to the change in the cost driver. So each additional unit of shoe or each additional call would cost the same extra variable cost, while the fixed costs would remain the same overall. So in general, variable costs go up proportionally as your cost driver increases. However, the cost per unit stay the same, while fixed costs remain the same as your cost driver increases, but the total fixed costs, the fixed costs per unit decrease. And then lastly, we have, before we get to that, so the relevant range is the range over where these variable and fixed cost assumptions work. For example, if you're Nike and you're building shoes, but you want to build produce more shoes than your factory can hold, then you'd have to build another factory. And therefore, your fixed costs would be higher and they would stay the same. Likely your variable costs would also change. So it's only within that relevant range that your variable costs are variable and your fixed costs are fixed within this definition. And then lastly, we have period costs and inventoriable costs. So period costs in general, they're expense in the period incurred because they really have no future benefit. While inventoriable costs are costs that are capitalized through inventory, similar to in financial accounting, and then they become cost of goods sold when they are sold. And they are only expensed as cost of goods sold when they are sold. But as opposed to financial accounting, because you are trying to value your inventory in whatever way makes sense for your purposes, you can really choose what you include in inventoriable costs or period costs. And we will get to various forms of that throughout the rest of the course.